Okay, we don't need none of that intro malarkey because it's going to work. So, hello, welcome to this week's interview episode of the Cryptoverse live stream. Excuse me. So who we got today then? We've got Lior Gantz, I think that's how you pronounce his name, Lior, from Wealth Research Group, his organization, and he has actually interviewed me himself on a previous occasion, so I am reciprocating. You know what we like to do? We like to broaden our view, broaden the points of view we have on the show, and also he was kind enough to have me exposed to his audience, so why not reciprocate back? He has different expertise to me, so, you know, we can never, ever have too many points of view. Because that one point of view that you need may just be the one that brings you a new light of awareness to you. So right now it is 1 p.m. Oh, excuse me. It's 1 p.m. in the United Kingdom, and it's Friday the 15th of February 2019. I am your host, Chris Coney. So I've created another one-time, one-use coupon code for my online school, Cryptoversity. So I'm doing this once per video now. So if you go to the link in the video description, you'll find a coupon code that's like 1502-2019 WRG, which stands for Wealth Research Group. And that basically expires as soon as someone uses it. And it gives you 50% off Cryptoversity membership, which is my online school for crypto investors. And it's normally $59 a month, but if you get 50% off that, it'll be $29 a month. So the first person to use that code gets it. It then becomes invalid, and then I create another one for my next video. So it's kind of a fun little thing. It's a fun little game. And the last 2 days, people have claimed them, so they've expired. So if you get a coupon code invalid message when you put it in, that's because someone's already claimed it. The other way you can support me is by going to the Cryptoverse website, which oddly enough is thecryptoverse.show. From there, hey, Professor Wally, you're back again. You can click on support the show. That'll take you through to Patreon, where you can pledge any amount of money you want. But if you pledge $5 a month or more, you get bonuses and perks and everything's on there. You can pledge anywhere from $5 a month up to $3,000 a month if you want to be the God sponsor, which is what that package is called. All right, then. That's that. That's all we need to say, really. Oh, we've got questions coming in for Lior. My goodness me. So let's collect some of these questions from y'all peoples. I've got a few questions of my own, as I always will, but I like to get quick Game of Thrones, this user's called. Let me just copy it right out of the chat. Lior, are you still holding IVFI? Invictus MD. It's getting crushed compared to other MJ stocks. What's an MJ stock? MJ, is that emerging market or something? MJ, what does that stand for? It's going to be obvious as soon as someone says it. But Game of Thrones user, let me know what MJ means here. Oh, is that Professor Wally with a tip? Yeah, it is. Professor Wally's in with a $4.99 tip. That's the second tip Professor Wally's given me today, I think. Is it today or yesterday? Professor Wally dropped me, oh no, he dropped me $9.99 yesterday on Valentine's Day. Thank you, during the stream. Lovely job. Very sweet, very sweet. Oh, thank you, Pitman. MJ, it's Mary Jane, right? Marijuana. Got you. Marijuana stocks. Got it. Totally got it. I know that's a, we should ask him about that. Because I know that's a hot sector right now. Well, or it's supposed to be, but has the boat sailed? Don't know. Who was talking about marijuana stocks? It was Nicholas Merton, right? Data Dash. He does a piece on MJ stocks. I'm going to start saying it now, aren't I? MJ stocks. So where am I going to put this question about weed? Weed? That's not a very nice word, is it now? It might be a weed, but that's like a derogatory thing. Weeds aren't considered very valuable, you know? Where do you specialize in any particular area? That's a question I've written. Okay. What is the state of the marijuana equities space? Lovely. All right then, that should do us. Let's get him on, shall we? Come on, pull in more questions. I've put that question in about Invictus MD into the old chat. Well, I suppose you're asking about that Game of Thrones because was that something they recommended or something? Because they have a research newsletter, I think. Well, that's come about all this. But well, I suppose that update would come from them, but we may as well ask him when he comes on. Righto, let's see if he's ready. Are you ready to join? See if he's ready. I'm also monitoring my... Oh, bugger it, look at this. I'm also monitoring my Bitcoin short, which at the minute is, you know, the what's that candle? 11 a.m. candle. Nice, big head, bearish, liked that. Next candle closed above my entry, so I'm underwater right now. This is the key point. Where is it going to set another lower high? Don't know. Or is it going to continue consolidating? But I'm keeping a good beady eye on that. If you don't know what the hell that is, look at the other broadcast I did today when I gave you a live demo of my short trade. Lior says it's Skype. Yes, right here. He's on Skype. We're chatting. He's here. All right, we'll call him then. So same drill, guys. I'll call him and I'll unmute him when he's in. Got my customary cup of tea in the flower cup today, not the Cryptoverse cup. Hello, matey. Are you there? Hello. Can you hear me okay? Right, okay. I'm going to patch you in 3, 2, 1. You're in. Okay, now your audio feed is through to the live stream. Let me put you on the screen. There you are. There we go. So, how do you pronounce your name? Is it Lior? Lior?
Lior, yeah.
Lior.
Hey, yeah. You know what? I see the room in the background is dark. Let me lit it up. Okay?
Don't worry about it. Yeah, that's perfectly fine where you are. Don't worry about it. It's fine.
Change here.
Yep, good enough. Good enough for me. Good enough for me. So, welcome to the Cryptoverse, Lior. Just say hello to the live audience so they can hear you.
Hey. Good morning.
Good. Good morning, yeah. What is it, 6 a.m. for you?
It is.
Okay. Pretty early in the morning. Sweet. Righto. So, I was just explaining to the audience here that we did a bit of like an interview swap. So, you had me on your show kindly enough. So, now I can have you speak to my audience. So, let's begin. First question, what do you do over there at the Wealth Research Group?
Wealth Research Group is a free financial newsletter that free? Is, yes, it is.
Okay.
And it is predominantly focused on financial education in the fields of investing. Basically, what happened to me in my life is that when I was 13 years old, my father's business went bankrupt. Okay. And I saw periods in my house where no power was on because they didn't pay the bill, or no phone or something, and I was getting very frustrated at the age of 13 because it's like the age when you want to start dating girls and you want to start doing stuff and you have no money to do it, and you have to ask your parents.
Sure.
So I took action initially. I went to a clothing store right next to my house. And I came in every day for like 2 weeks, and every day I showed the owner that I know more about the brands than he has in his store. Finally, after 2 weeks of doing this, like 2 hours a day after school, I was able to sell a lady that came into the store a lot more clothing than his salesman did, not as a capacity of an employee, just being there and telling her, why don't you do this, blah, blah, blah. And he hired me. He hired me for $4 an hour. It was 1997, and it boosted my confidence. A week or two later, I took that money. I printed out flyers for private lessons in basketball and babysitting. So I'm 13 years old, and I'm handing this out to the parents at with their carpools when they finish school. And I started doing a lot of babysitting, and 3 years later, from this coaching job and basketball coaching and babysitting and in the clothing store, I was able to save about 20 grand in today's money. So I'm 16 years old, and now I have a bank account. I have money in it, and my banker tells me, money doesn't sit. You need to do something with it. So I tell him, what can I do? He said, you need to invest. Now this was 3 months after the dot-com bubble burst.
Wow.
So obviously I don't know about this. Like it's not like I'm living the markets, but I'm just giving you a backdrop.
Sure.
And I asked my grandfather, do you invest? And he says yes, and gave me 2 books, one from Warren Buffett, the other one from Peter Lynch.
Okay.
The one from Peter Lynch, who was the greatest investor in the 80s. It's all about how his teenage daughter, so she's my age when he writes the book,
right.
and he's saying like, she gave me my biggest winners, the biggest winners in our portfolio. Now, just so you, so the audience is aware, it's a fund that doesn't. There are no such funds anymore. They had like 3,000 stocks in the fund, so goes against anything that people say about beating the markets. So beating the markets, everyone says you need to have 5 to 7 to 10 stocks. Concentrate your portfolio. You can't beat the index if you overextend. This fund had 3,000 stocks, and the average yearly performance was 29.7%, 4 times better than the S&P 500. In today's world, every pension fund, every sovereign wealth fund, everyone will be basically knocking at Lynch's door, and not only that, but they would be paying extra to get into the waiting list. So, anyways, it gave me a lot of confidence, because what he said in the book was, if you can't understand a company in 30 seconds, or better yet, if you can't explain the company to somebody else in 30 seconds, it's too complicated of an investment. Stay away. And so for his daughter, he said she picked stocks in companies that she knew, she understood easily, a teenager. And he gave a lot of examples in the book, and it's a must book. So it's one of my favorite books that I read habitually. If you go to wealthresearchgroup.com/rich books, you can download a list of the top 5 books that I've read in my career in investing. The second book was from Warren Buffett. It's about Warren Buffett. It's about his biography, and in his biography, they talk about the power of brands. So brand loyalty and how much brands is important when you invest in companies. So I married those 2 ideas, basically, of what do I know at 16 and brand power, and started investing for myself. What I got is a waiver from my parents at 16, so I can manage my own account as a minor, and started investing 18 years ago when I was 16 years old. And 2 years later, I was thinking about entrepreneurship. So I started reading a lot of entrepreneurship books. So now I have like 2 things that I'm very interested in. I'm always reading investments, always reading entrepreneurship, started businesses. And about 3 years ago, in December of 2015, it was when the Federal Reserve hiked rates for the first time after a long-term time of cutting them or keeping them at 0 negative rates. I thought I would take everything that I've learned about investing, and because I've always, I've even had a small boutique fund for high-net individuals at one point. Financial education is the plague of our society. People just do not know many of the basic things about financial education, is because at the time I've spent reading investment books, they've spent reading academic books. I never went to college or anything like that. Finished high school, started educating myself and building businesses, failing, etc., until it succeeded. And so I wanted to transfer what I have in my head into the readers, and that's where Wealth Research Group was born. So it's a mix of financial education and the big picture, what's going on in the economy, in the global economy, and worldwide, and also what am I investing in personally? What are some of the things that I'm passionate about? So it's a mixture of both. I'll give you an idea. In March of 2017, for example, when Ethereum was $12 a coin, I first got exposed to the coin. Immediately, I alerted it on our newsletter, and 6 months later it was over $1,000. So people made a lot of money with that. We covered Bitcoin, for example, at $400, Monero at $19. I actually interviewed Litecoin founder Charlie Lee when Litecoin was $20 before it popped to over $350. Steam, we were there at about 19 to 20 cents. So the idea is just to marry big picture economy and financial education with what I'm doing personally, and that's what the newsletter is about. If you go to wealthresearchgroup.com/top, for example, that's like a wealth library of mini PDF downloads that are financially educating. But if you follow the newsletter, you'll be most up to date. So that's basically what Wealth Research Group is. My biggest passion and the part of the portfolio that I put most of my emphasis on is a group of companies that are called dividend aristocrats. And that's what makes the biggest part of my portfolio by far. That's how I built investment wealth over time. If you go to our site, on the top menu and you click Dividend Mania, or just hit wealthresearchgroup.com/dividend, you'll see more about what I mean. But that is basically the focal point of the way I invest.
Okay, gotcha. So here's the question that came up for me. Does what you learned map easily over to crypto? The reason I ask that is because some people think that crypto doesn't follow traditional investing principles or traditional investing rules because they're not traditional companies, or because they don't have traditional balance sheets and that kind of stuff. So how do you map your existing sort of analysis over to the crypto world?
So it's a great question. It's probably the most important question that you need to ask yourself. Is cryptocurrency investing similar to stock market investing? In the stock market, what you're doing, and the stock market is a wrong word. Mm-hmm. So the best word to define it is a market of stocks. Imagine yourself walking through a market mm-hmm. where all the items are priced. You can see all the prices at all times during market
like vegetables
hours.
And apples, and just like a classic market stall.
Exactly. And then you start shopping, but very different from food, which you must consume every single day. In other words, you must buy them. Stocks are not mandatory. You can stay away from them for years, decades, and not even invest at all.
Sure.
So they're not essential. Now, what I want you to imagine is that the prices change. They come up and they mark them and they change them up or change them down. And most people, what they do is they follow what the bidders or the people that decide the prices, what they decide is what they think about the stock.
Okay.
Or about the item. And what I want you to do is realize that if you analyze the item yourself, you'll have a better chance of understanding what price is best to pay. Mm-hmm. So if somebody raises the price of fish by 100%, it doesn't mean that same fish is better. Different from fish, a company expands, it grows, it becomes better. And so that's the big thing about companies. They are dynamic. They can go better or worse and lose their competitive advantage, go into debt, etc. So it's all measured by the management team and what they do. And therefore, in a market of stocks, what you want to do is become an expert on some of the items, a very small amount of the items, and then be ready to grab them when they are priced for perfection. And it might take time. It might take several months or sometimes years to catch these companies when you really want them. But when you do, that's one great thing to do. What's beautiful about the market of stocks is, in general, the market is good. It's a high quality market. So if you buy a basket of the 500 best items, or what we call the S&P 500, you'll do very well in your investments. So if you don't, even if you don't pick and become an expert on particular ones, you'll still do good. Very different from the cryptocurrency world. If you take a basket of all the cryptocurrencies that are out there, you'll lose a lot of money. And the reason is, in contrast to what's happening in the stock market, The stock market is built of, or the 500 largest companies in America are very stable. They're growing at about 10% a year for decades on end, and the people that are in charge of the S&P 500, they replace the companies according to their market cap. So you always get the 500 largest ones, but they're not always the same companies. So they always have the biggest companies in America in that index, for example, and you can trust the index for the most part. Investing in corporate America has been a very good idea for since inception, I should say. Now with cryptocurrencies, you're not getting to invest in a market of companies where you can see a proven history, where you can see their balance sheet, where you can see the management, hear the management, talk to the management, where you can visit facilities, where you can look at what they're doing. And the reason is because it's not investing, it is speculating. What you're doing is a different level of investing, which requires more skill at times and far more risk. So because you have less data, and because what they're doing is unproven and they're not generating revenues, in other words, this is not a predictable idea. Here's the best way to put it. If I buy the entire company of Starbucks, I know what I'm going to make, because they have revenue, they have cash flow. So if I take it private and I'm the only owner of it, I know what I paid and what I'll get every single month. I'll have a yield.
Yes.
If I buy all the Bitcoins in the world, what do I get? What do I own?
Well, you'd actually mess the whole system up doing that.
Yeah, but what do I own? I own lots of Bitcoin.
Yes.
And in order for me to realize that, or to do something, it doesn't generate anything for me, right?
No, you don't even get the mining rewards, right?
Sorry?
You won't even get the income from the mining rewards by holding it.
Yeah, but the big thing I'm trying to get at is that they don't generate any revenue.
They don't. Not even
Similar
fees
to
or
gold or similar to silver, they're an asset class that doesn't produce cash flow. The idea behind them is to own them because you speculate that somebody else will pay more for them in the future. That's the reason. That's one big reason to own them. The second big reason to own them, cryptocurrencies, that is, or I should say, the most established cryptocurrencies that want to be currencies. So Bitcoin, Litecoin, the ones that want to be currencies. I'll talk about the other ones later, but the ones that want to be currencies, the big reason to own them is because they're outside of our current financial system that is predominantly shifted and altered by central bankers, and it's very political. We have political currencies.
Yes.
And so the most stable countries have the most stable currencies, and the richest countries have the most liquid currencies. The rest of the countries have very mediocre currencies. So if I told you, hey, Chris, put all your life savings, if you choose to, in a currency of a second world country, you'd be very fearful.
Yeah.
Not even talk about a third world country, which I don't even want to call them currencies. And so we would focus on the big ones. We would focus on the dollar, the euro, the Swiss, but even they are very bad long-term holds for your savings because they're inflating, and because obviously the people that issue them have issued too much of them. They mismanaged them, and now they're very bad ideas as a form of savings. So that's the big thing about it. Cryptocurrencies have come along at a time where fiat currencies are mostly failing, and that's one reason to allocate into cryptocurrencies, not as an investment, but as a way to hedge some of your savings, the same way you hedge some of your savings in gold or silver or in other methods. Maybe you buy watches, collectible watches, because watches have they don't go down in price if you buy the right watch. They actually go up in price. Or maybe you're buying something else that doesn't produce a cash flow, like a vintage car, yes, or pieces of art. Doesn't matter. Or maybe you buy cash flow, like a rental real estate, etc. an ownership part in a business. For currencies, what I like about them is that they're very liquid. So if you buy a real estate, it might take you months to to sell it with a realtor or whatever. With cryptocurrencies, it's instant. And obviously, people buy cryptocurrencies for other reasons as well, because of their other features. So the idea behind cryptocurrencies is very different than investing in the stock market. When you invest in the stock market, you buy a piece of a company, and when you invest in cryptocurrencies, you basically convert fiat currency into a cryptocurrency. So it's very different. It's not an investment. It's a speculation if you want to do it for the purpose of earning money, and it's a protection hedge if you're doing it because you don't trust your government. So those are the two main reasons. Now, there are cryptocurrencies that the name cryptocurrency doesn't fit, because all they are is little startup companies that have issued coins instead of issuing stock, and they're basically just little startup companies on the blockchain tech. So when you invest in them, it is very much like investing in the stock market, but you're investing in companies that don't generate revenue yet, and therefore they're the highest type of risk involved. Their failure rate is usually 95%. And so unless there's a year like 2017 where the sentiment itself towards the entire industry is just so positive that no one can do anything wrong, unless you're in a year like that, which was 1999, 2000 for the dot-com stocks, and it was 2012 for rare earth metals, and it was it's always one thing, right? And it was cryptocurrencies' turn to shine that light, that speculative light. But unless you're there, you should really pay attention, because you're in a very high-risk game. And you want to know everything you can about any coin that you get involved in, because it doesn't end with just having a great coin or a great product. You need to have great management. The management needs to know how to manage money. The management needs to know how to market the coin. It's a company. It's essentially a company, and all you own is a piece of it, and it's on the blockchain, so you can trade it 24/7 with people around the world instead of market hours, and Monday to Friday. That's the big difference between them. That's my point. It's very different. Treat it very differently, and go into it with position sizes that are according to the risk you're taking. So don't put 10% of your portfolio in any one of them. The better use of your money is to put about a percent to 2% and have a tight stop loss if they go down. So even if your bet goes wrong, it doesn't hurt your overall being, your overall portfolio, your livelihood, etc. If it goes right, we've seen what happens. So I think that's the most important key point: position sizing and understanding the failure rate when you go into this investment class, and the reason to own it.
Gotcha. Super. Yeah, I didn't want to interrupt you there because you were on a roll, mate. So that was cool. Very pragmatic was what I just wrote down on my notepad there. Very pragmatic approach to cryptos. I tell you what my failing is getting like attached to it. And what I mean by that is like I've made this my passion. Now that's dangerous from an investing point of view, because passion is emotion, and emotion distorts. So that's why I wrote down, what stuck out to me straight away about you is like, you're coming at it not as like your identity isn't, I'm a crypto enthusiast, right? Because even enthusiasm is an emotion. So you're like,
it is.
I'm an investor.
It's a strong emotion.
Right. So you're like, I'm an investor, and I'm going to look at this through that lens, and then you're able to see it, to be honest, a lot more clearly than I might be able to, because it matters to me so much, right?
So our egos are the highest part of our decision-making process, because our egos determine whether or not we will listen to reason and logic or to emotion. Our egos is where the willpower comes from, and we can decide or not decided, then it will happen subconsciously, whether or not we want to pay attention to our logic or to our emotion when we make any decision. Now, investing is not only about reason. So I know many people say leave emotion out of it, but that's not true. That's not true. Investors move from fear and greed, but they also listen to logic, and you have to just weigh which you want to listen to. Most of the time, you want to listen to logic, but I'll give you an example where you want to listen to emotion. In 2008, I was river rafting in Colorado, September, and I'm there for 4 days, no signal, Chris, no cell signal.
Okay.
While I'm doing this, at the same 4-day period, Lehman Brothers falls apart. So I don't even know, but I'm coming out of the river. I have like 255 unanswered emails and SMS messages, and where are you? It's where the are you? And things are happening. So, but I was there for 4 days having a good time, and I wake up to the world, and what the hell happened?
Mm-hmm.
What happened in 4 days? Does Intel not sell any chips anymore?
Right.
Why is it down 40%? And so panic did not rub off on me because I wasn't there for the initial part of it. So I was able to just look at what's going on and say, wow, this is overblown. So the financial system is in huge trouble. Banks can go down, etc. But I don't see any reason why, for example, Las Vegas Sands, an operator of casinos in Vegas and Macau and everywhere else, the dominating casino company in the world, why is it down from $150 a share to $3 a share?
Wow.
What happened? And so that's when I got emotional and said, I'm greedy on Las Vegas Sands, for example. It doesn't make any sense logically. And I'm getting to where I'm a greedy person about it, and so I bought a position that's bigger than what I usually would allocate to a company, because it's time of opportunity. You need to take massive action. So Las Vegas Sands a year and a half later was $50. It went up 17 times, just because of the fact that materially they had so many real estate assets, cash in the bank, and people didn't stop gambling. The idea of the financial crisis was, hey, no one's going to go to a casino, etc. It was overblown fears, emotional fears. And when it didn't happen, obviously people bid up the stock to where it's more in line with intrinsic value, and they did that with many companies. So getting involved after a huge price decline is an emotional decision because it's hard, but it is what you need to do. $20,000, now $3,600. The risk of owning Bitcoin has diminished by 85%. If you want to get involved, this is the time to get involved. But look at the mainstream media. There is nothing about Bitcoin anymore, because what the mainstream media sells is ad space, and they need to write about whatever is popular, whatever is dramatic, or whatever is very negative, or most predominant emotions. So as an investor, this is a great time to get involved in Bitcoin. If you are going to get involved in speculating in cryptocurrencies, because the risk has gone down substantially for the Bitcoins, big stable coins, right? The more predominant ones. For the small ones, the risk is pretty much the same, because it's not the price that was the risk. It's more of the survival mechanism. Could they even last? Bitcoin is not a coin that is in survival mode. It's going to stay there. The only question is what will sell for in the future, right? But for if you go down the list of 1,800 projects, most of them will just not be there. It's just a fact of life. So that is the main message here. You need to get emotional. It's fine to get emotional, know when to get emotional. After a huge price drop, that's when you want to get greedy. When it's going up and you're chasing it, you want to listen to your logic.
You've rewired your brain though. You've reversed the gears. That's that thing where like be greedy when others are fearful, but you've embodied that.
Well, you practice it, right?
Right,
No one's
sure.
no one's even remotely perfect to it, because otherwise people would
Just make out like a bandit, right? Exactly.
there will be more market wizards,
Right.
and the system wouldn't even work, right?
Absolutely.
Because being a contrarian won't pay off anything, because everyone will be
Got you.
their
Totally
own
got
contrarian.
it. Totally got it.
But yeah, look, it's just important for people to really put into perspective some of the things that are running on YouTube, because YouTube is uncensored, it's unregulated, and for the most part, if people really, if YouTube was fully regulated by like the same people that audit companies, etc., 90% of what's said on YouTube would be banned. So people say whatever they want, and because they say whatever they want with no repercussions, people say a lot of things that are very predictive of the future, and they're not true. So it's important to take a compilation of whatever you hear someone say, go back like 2-3 years, and listen to the body of work. You'll see that most economists, the most they can tell you about the future is the most their predictions tell you is what their personality is. It doesn't tell you anything about the future itself, because it's mostly impossible to predict the future. In fact, Warren Buffett says that any company that employs an economist has one employee too much. So one employee too many, I guess. So opportunity needs to come to you. Don't build a scenario of the future and invest according to that scenario. Invest according to the now and to the known, and to the data that you have in front of you. What I do personally is I have a watch list. So if for example, if you go to wealthresearchgroup.com/watch, you'll see a list of companies that I watch. And what I do is I learn a lot about them, as far as I can learn, because I love their competitive advantage. I love their branding power. What I don't love is the price that they're selling at right now. And what I do is watch for them to come back to where I want to buy them. And if you have a watch list, if you develop a watch list, then you'll have a better idea of when you want to buy something and why you want to buy it and when you want to exit, if at all. And so I think that is the main message for me. Let opportunity come to you. Don't bet on the future. Don't bet on any scenario. In fact, the less weight you give to the future, the better. In classic value investing, for Benjamin Graham, the mentor of Warren Buffett, in the Great Depression era, Chris, he didn't pay any mind to the future. It doesn't work today, but what he did was buy companies for liquidation cost. So, in other words, if you find a company, all you want to find out is how much you can sell that entire company for. Their real estate holdings, their machinery, their reputation, everything.
Get your money back, right?
How much is the liquidation cost of it? But obviously, a company like Starbucks, if you sell for liquidation, then you're losing a lot of money, because the next day, all those assets will produce cash flow. So they have future cash flow. Obviously, you don't want to pay liquidation. You want to pay liquidation plus a premium, because that company will keep selling stuff forever on that on those assets. So right now, you can't buy at liquidation cost anything that's not on the doorsteps of becoming bankrupt. So you do pay a premium, a multiple. And the idea is just to understand how much of a multiple you want to pay. And then if the market, other participants, are discounting the shares too far down because they have overwhelming fears about the future of the company, that's a great time to get involved. I'll give you an example. 1997, October, Coca-Cola. It goes down substantially. And in the offices of Warren Buffett, I believe that they were popping open champagne bottles because they were buying hands over fist while the entire market was in panic, and all you can see in the mainstream media is panic. Warren Buffett, at the same time, was applying logic. Will tomorrow people buy far less cans of Coca-Cola? The answer is no.
Nope.
And he was able to pull the trigger, buying about 15% of the company overall. And his position, just to give people an example of the power of dividend compounding, which is what I focus on. Now we're 30 years later, right? So over 32 years later, after 1987, his original investment is now paying off in dividends about a 50% annual yield. 50. Every year, half of that original investment comes back to his pocket. People want to know how that happens. Again, it's called compounding. I won't go into it, obviously, right now, just because it's a little complicated. I don't know how much time we have, but if you go to wealthinstitute.com/dividend, you can start learning about it. But it is what Albert Einstein called the eighth wonder of the world.
Eighth wonder of the world. That's right. Yeah. Crazy.
So it's attributed to Einstein. Who knows if he really said it? But it's a great quote anyway. So I'll give it to him.
Sure. Whoever said it, it's entirely plausible, right? I mean, it is the wonder of the world because it's like a magical force, that compounding. You said so much stuff there. I mean, like one point I wanted to make was you were talking about the media. Their business model is advertising. Whatever's not trending, they won't talk about. So if crypto ain't trending, they won't talk about it. And then you talked about YouTube, and I just wrote down YouTube also equals ads. So this is one of my plights, to be honest. Is there's a huge incentive to just constantly put out hype and clickbait because that'll generate ad revenue. And every time I do it, I feel dirty.
Or just traffic. It doesn't have to be even ad revenue.
Exactly. You know?
You're competing with other people for the attention of the users. And in order to do that, if if your thumbnail is not exciting or if your title is not exciting,
but if you tell the truth,
hard.
Even, you just have to get views.
So it's always the debate between being commercial and understanding the mentality of people and how people's brains work, and being brutally honest and very non-commercial, I would say. So there's a lot of absolutely phenomenal guitarists that are sitting at home right now unemployed. Sure. Because they don't know how to market themselves. There are very mediocre guitarists that have the entire, that they have the tattoos and the long hair and everything, and they play for very big bands. So it's part of business to understand that marketing is a huge part of whether or not something will succeed or not. Look at Virgin, right? Look at Richard Branson's group of companies, the largest group of privately held companies in the world. Mm-hmm. And why does Virgin succeed so much? It's because Richard Branson flew around the world in a hot air balloon, and then he went over the English Canal in a car that goes on water, and he's done all these crazy things that have nothing to do with the product itself. Sure. Saying nothing about the product, but marketing has brought him here. Look at Coca-Cola. They sell caramel water for the price of oil. So how did they do that? And the reason is marketing. Cigarettes. Look at cigarettes. It's only marketing. And obviously once you're addicted, it's done. There are many items that we don't need in our lives, and we consume because we've been marketed to. So yeah, and that's the reason you need to apply your logic. Do I need this, or am I just getting excited over nothing?
Very wise. I wrote down earlier on a quote that I heard from Ryan Dice, who's one of the people that I've learned a lot about marketing from, and he said at one of his conferences one time, it was the first thing he said on stage. He said, in business, there are only three things that last: brands, media, and retail sales channels. Right? He said everything else changes, products, trends, everything else changes. But the only thing that lasts are those three things. Like Amazon is a retail sales channel. Walmart is a retail sales channel. They're not attached to the product line. They'll sell whatever, VR, guns, whatever. Media, which is like YouTube, right? What articles are put out, what videos are put out changes from decade to decade, but the media channel itself remains. And then brands. And then I wrote down next, because you talked about brand investing earlier on, right? Investing in brands in the stock market. And next to that, I wrote down Bitcoin, because when...
Oh, it is a brand.
All right, I'm going to say, I'm
Sure.
going to put forward an argument that one of the main reasons why Bitcoin's not going anywhere is brand. Even though if it's not anywhere near the best performing, blah, 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 Bitcoin is cryptocurrency for a lot of people. And that brand
Couldn't agree with you more.
tons of value.
You're dead on.
No, thank you. Appreciate that. So
there's a premium to pay. It's the reserve currency. It's a brand as much as the dollar is a brand. The almighty buck. That's a brand. When somebody says the almighty dollar,
right?
What does that mean? It's a brand.
That's a tagline, isn't it? It's a slogan.
I'll tell you the biggest ever successful marketing slogan that is completely false.
Okay.
And people around the world, including in Britain, they say it every single day.
Go on.
And it is, breakfast is the most important meal of the day. Now, you know who came up with that? It's a person named Kellogg that wanted to sell his corn garbage.
Right.
Yeah, it's corn garbage. You couldn't sell it because that thing was just so not healthy. And and what he got was essentially he phrased that slogan, and then he paid some scientists to run some false experiments on it and provide some proof.
Oh,
that,
snap.
Yeah, but at that time, in 1916 or around that time, I have to go back to that book because it's a phenomenal book, but whatever it was, people weren't eating breakfast at all because when you sleep for 8 hours, your body is like after a full tank of gas. You don't need to eat. In fact, sometimes when you eat breakfast, you feel very tired after it. And you want to go back to bed or something because you ate too much. Why is that? Because for no reason, your digestive system now consumes energy from your body. You had a lot of energy. Now you're starting to suck it away. So he came up with that. People still say it until this present day, and people are arguing with their kids. You need to have this breakfast.
Wow. That's powerful.
But it's a marketing slogan, and there have been many. There's a great book about toothbrushes and how they toothpaste and how it came to be. And marketing is a critical point. If you become a student of marketing, you're going to learn a lot because marketing is all about changing people's habits and how they do stuff. We're getting off track, but. Marketing is the most
brand. That's where we came from, so it's relevant.
Yeah. So branding power is critical. It creates loyalty, and it creates the decision in your mind to be subconscious. When you go to a kid's store, and it's Disney or something else, Disney wants you to buy Disney because they want to program your mind to buy Disney. That's the branding power of it. So, and it is with any other consumer product. That they're trying to addict you, to make you addictive to it or loyal to it is their word. Our word is addictive as consumers. But yeah, that's the main idea. Make that product as sticky as possible.
Gotcha. Someone asked in the live chat earlier on about marijuana stocks, which they're called MJ stocks. I had to ask what that was. So now I understand what that means. And they asked, because I'm not. I don't study that sector, in any detail. But my impression of it is, it's like everyone went a bit crazy over it because once it was legalized and tons of companies started up and some floated on the stock market, it was seen as like, oh my god, this is a huge growth area, massive opportunity, and so on and so forth. So, the question was, are you still holding IVIF, whatever the hell that is, Invictus MD stock? And
personally, if I'm holding a company called Invictus MD Strategies,
is that what it is? Yeah, I'm assuming, because they didn't clarify this. I asked before you came on, but I'm like, was that one of your picks or something?
Yeah, it was. So Wealth Research Group alerted about a company named Invictus MD in October of 2017. Yeah, October 2017, about $1.20 Canadian, and it went to about 276 intraday, so more than doubled by January of 2018. It then came down. So if you didn't take profits, Wealth Research Group doesn't create sell alerts because we don't create. We can create situations where we put together an idea and it's an investment opportunity, but many people hold investments for a different duration of time, and or in other words, they if the stock goes down, they have different stop loss mentality strategies in mind. So what Wealth Research Group does is cover investment opportunities in general, or companies that I personally believe have a very bright future. So in other words, if a company goes from $1.20 to $2.76, for me that is enough. That is way above where I want to sell it. It's because it's over 100% gain in 4 months. That's spectacular. So what I do personally is sell that company. It then went down back to about $1.20. I personally got in again. That's called dollar cost averaging, or just monitoring the watch list, like we said, getting back to where the price is comfortable for me. And then I got in there again, bought it again. It went to about $2.31 again, so almost doubling again. And right now I have no position now.
Gotcha. Cool. Sweet as. Someone else asked on a Bitcoin question, which was, I said, what are both your thoughts on what's really happened with the Bitcoin price, considering all of the activity on OTC desks?
Can you repeat that? I'm sorry, I lost the first part of the question.
That's okay. There's a few people asked a similar question, which is, how do we know what the real market conditions of Bitcoin is when, say, our technical analysis doesn't show or account for over-the-counter trading desks and all that volume? How do we deal with that?
So you don't have perfect information. You have imperfect information as part of the business, part of investing. In the stock market, for example, a lot of people follow what billionaires do, or what investors that are billionaires do, or the funds that they manage, and we only know what they bought in the quarterly filings that come 3 or 4 months after. So you know, there's always a delay in information, and the more you know, the more you can process. So a lot of these hedge funds, they have satellite pictures that show you how full the Walmart stores are, the parking lots, so they can assess their quarterly earnings by knowing the traffic.
Wow.
They know a lot of stuff. There's a lot of espionage, industrialized espionage that goes on. So, you know, there are many people that employ a lot of outsiders that run, you know, their independent analysis of what's happening. And it's the same with surveys, right? The surveys company calls you, hey, are you satisfied with this product? It's also to know whether or not you're going to come back, right? Rate our product. Everyone rates their products now. How's the experience? Are you likely to tell anyone else about this? Share this or affiliate marketing. So, you know, we all try to make sure that, or every company is trying to make sure that they have repeat business and that they have referrals, because that's the best sort of you know, marketing. It's free, word to mouth, and it's very strong. So, with regards to these people's questions, like I said, in Bitcoin and in many other investments, you will not know everything. Even when you buy you know, a house, real estate, and you get the appraiser in there, and then you get like somebody to look at all the foundation and everything, he might miss stuff as well. And 2 years down the road, there might be a big problem with the house. So with a piece of real estate, it's easier to know, right? And with the stock, it's less easy. And with cryptocurrency, it's very hard. So that's why the technical analysis that you learn with stocks that works about 55 to 60% of the time, here it works even less because it's even less predictable. So a lot of technical analysis charts don't work, but there are certain ones that have an 85% predictability, and they you know, and they are important as a gauge of what's going on. So it's just if you work with technical analysis, then you must understand that some things have a 50% chance historically, and there are very rare ones that have an 80 to 85% chance, but they materialize every few years. So they they're so predictable that they don't happen all the time. Um, so yeah, that's kind of where it is. Just don't make the decision just off of a chart. It's only predict. It's a game of odds with technical analysis.
Got you. Totally got you. Right, we're about out of time here, which is that's gone really quick. So thanks very much for sharing all that info. What I'm going to do is give you what I always do with my guests is give them the floor at the end without the restriction of a question. If there's anything in particular you really want to share with the audience, go ahead and do that. If you think we've covered everything, just give out your links one more time.
Sure. Well, I'll just say this. With regards to many political fears that people have right now about political uncertainty around the world, Germany going into recession, Italy wanting to seize their gold back from the central banks, the China-U.S. Trade deal debacle, everything that goes on around the world, just remember that in the 20th century, we've seen 2 world wars, we've seen influenzas around the world, flus, oil shocks, a dot-com bubble. We've seen everything that you could possibly see. And yet, the stock market has returned about 8% every single year. And the world is not ending. It does go through major disruptive changes. There used to be an elevator boy inside of every elevator that needed to run it. Before we had automized machines in it. There used to be 20 tellers in every bank. So things are changing constantly, but wealth is also being created. So the idea of Wealth Research Group, the newsletter, is to be on that side that is part of the growth in the global economy, and despite everything that's going on, is able to invest accordingly using his logic and its emotion. So that's where our top-rated ideas and our highest priority ideas are in the newsletter. And also, if you want to just check out a lot of the weekend reading stuff and reports, then I think you should go to the website and hit the top menu button that says either special reports or dividend mania, and just download some of the PDFs. Get involved, start to understand investing at a higher level, and ideally become a person that has a portfolio outside of his career. So you have 2 engines running for you: one your main career, and one your passive investing income.
Beautiful. Well, Lior, I very much enjoyed talking to you. You have a wealth of knowledge. I'd love to have you back on sometime, because I think we only scratched the surface there. So for now, mate, I'm going to thank you for being on the Cryptoverse.
Thank you, sir.
You take care, mate. Bye.
Bye.
And he's out. Wow, that was cool. That he has got tons of knowledge. You can tell. I can just tell by talking to someone like that. It's like, and he was so generous with it. That was cool, man. I had tons of questions that we didn't get to, but that was 55 minutes. So I thought, well, we need to wrap this up before the hour, because if people see the recording that's over an hour, they're not going to click on it. So we got to stop. We got to make sure we don't do that. So I'm out, ladies and gentlemen. Thanks very much for joining me today. Let me run the credits here. Play credits. How many credits we got today? Probably not that many. What we got? Professor Wally is the only credit today. With the super chat, thanks Professor Wally, always there with a beautiful tip. But thanks for joining me. If you liked the episode, hit the like button. If you really liked it, hit the old subscribe button. And also remember to support the old Cryptoverse. You can support it by going to where the hell's the button? The website, oopsie-daisy, thecryptoverse.show, click on courses, and you can join Cryptoverse. You can get all my online courses. I don't know if anyone's used the coupon code yet. No, they haven't. So the coupon code down in the description is good for one use. First person to use it gets 50% off. Or you can go to Patreon and pledge $5 a month or more and get yourself some kind of a bonus, which is also detailed on there. But I'll be back with the next episode of the Cryptoverse when I've got something else to say that is of value. Until then, it's me, Chris Coney, saying bye for now.